In a recent post, BR asked me if there is indeed a correction coming. And the answer to that is a resounding yes. One is always coming, but BR would like to know the potential timing of the correction and my guess to the depth of the correction. Lastly, BR would also like to know what macroeconomic factors might cause the correction. Let me start out by answering the last question first by reading a quote from Hannah Arendt. Never has our future been more unpredictable. Never have we depended so much on political forces that cannot be trusted to follow the rules of common sense and self-interest, forces that look like sheer insanity if judged by the standards of other centuries. And so it begins, once again, the never-ending, semi-delusional train wreck of an election cycle in which many allow themselves to be misguided by the belief that the future of this nation depends on who we elect as president. But as author Noam Chomsky observed, it is important to bear in mind that political campaigns are designed by the same people who sell toothpaste and cars. The nation is drowning in debt, crippled by a slowing economy, overrun by wackos, and riddled with corrupt politicians at every level of government. With roughly 22 lobbyists per congressperson, corporate greed will continue to call the shots. Be sure that our so-called representatives and the elite will grow richer at the expense of the people. Values such as honesty, integrity, and public service were dispensed long ago. So, BR, by far, the most important macroeconomic factor you need to pay attention to is the Fed. Why? Because a dollar today is worth only about 16% of what a dollar was worth in 1972. The only way to prevent the loss of purchasing power is to hold assets that gain in value. And that is a game that is always changing. What I have done is unplug the cable TV. I don't watch the national news. I don't listen to the pundits. I read, and I question. And I watch the charts, because the charts don't lie. So with that, let's take a look at the charts. And so BR wants to know the timing of the correction and perhaps how deep the correction will be. Well, nobody really knows, but through my process, I think you can gain a better understanding of the risks of when a correction may come. Perhaps the risks of how deep the correction will be, and then on the flip side, when a recovery may occur. Now, there are different times in the market when greater risks appear, and then different times in the market when the risks are lowered. And the oscillators for me are just simply probabilities. And if you can line up more oscillators to one position or another, then that will tell you the probability of the direction of the market that you're looking at. Now, right now, the risks are pretty high. Looking at this chart here, which is the 20-year monthly chart on the spiders, the SPY, we can see here that this previous top in early 2020, we're right near that level here currently. So perhaps we're looking at a double top. Now, if you remember, we were looking at something very similar back in this time frame here. This second top did exceed the prior, but we did have a nasty correction that followed relatively soon. So I'm looking for a correction. Now, this correction here, from that top down to this point, was about that measure there. Who knows? That's probably about 50 points. Now, from here, could we come all the way down? That's a possibility. I don't think it's the probability. Any correction normally goes to about 50%. So I would say that it could potentially, or the greatest probability, if a correction occurs, would be to that point there, which would be somewhere around 275. In my process, I first look at the monthly charts, and then I go to the weekly, and then I go to the daily, trying to find the matchup of the oscillators. You'll never get 100%, but you will get a predominance, and that tells you the greater of the realities. So let's work our way through here. Moving on down, volume looks fine. It's not great, but it looks okay. It is declining, so that is a potential cautionary flag. Into the MAC, you can see that this recovery here was very sharp. Now, the Fed sent a lot of money into the markets, and it made its way into the stocks and bond markets very quickly. This is a very quick recovery, and oftentimes these fail, but there's so much money behind it, we don't necessarily know. But we should be on guard at this time, simply because we still have roughly a descending trend, more or less. Moving into the histogram, you see pretty much the same information. Here into the price rate of change, we're at this point, which is at 63 and 34. 63 is the fast line and 34 is the slow line. We've only been this high in the last 20 years at that point here in early 2018. That is another cautionary flag. We haven't been at this level here except for once in 20 years. Moving down here into the relative strength, this is a bit better of an oscillator for me. This is one of my favorites. And this does show something very ominous. That top here, to here, to here, to here. Everything is descending. And I don't like that descending divergence compared to the market that's been marching upward. We can go back and look at some other ominous periods, such as right here and such as right here. Bad thing happens when the relative strength index declined like it is. We need to break up through that trend line. We haven't yet. Keep watching. Now the stochastics are going to give us a little bit of a mixed signal here. It's heading on up. We are into that overbought territory, and the fast line is ahead of the slow line. The slow line will make its way up there sooner or later. This isn't telling us too much other than the fact that we had this strong move here. We had a weaker move, and I expect that this last or third move is going to be even weaker. But time will only tell. Now, the same thing for the Williams. A stronger move here. This weakened at this time frame, and I would imagine the third one is going to be even weaker. So you've got a number of oscillators that are giving you some cautionary signals here. So you need to pay attention. Back up here to the price chart. And so you have a number of oscillators that are diverging from what we see in the price. Right now, the probabilities lead me to believe that this is a very risky time and that a correction is on the horizon. So let's leave it at that for now, BR. Saturday, we'll continue. We'll look at the weekly and the daily. And for today, that's ChewDog Charts. Thank you.